The S&P 500 reached unprecedented heights on June 27, demonstrating investor resilience despite President Donald Trump's recent comments on U.S.-Canada tariffs. The index's climb underscores a remarkable recovery from April's lows amid trade policy concerns. The benchmark rose by 0.52%, closing at a record 6,173.07, having earlier surged by up to 0.76% to a peak of 6,187.68, surpassing its previous record of 6,147.43. The Nasdaq Composite also reached an all-time high, gaining 0.52% to finish at 20,273.46. Meanwhile, the Dow Jones Industrial Average climbed 432.43 points, or 1%, to conclude at 43,819.27. However, stocks retraced from their session highs following Trump's announcement on Truth Social that trade talks with Canada were ending. Investor optimism initially surged when Commerce Secretary Howard Lutnick disclosed to Bloomberg News that a trade framework with China had been established. He indicated that the Trump administration expects to finalize deals with 10 key trading partners soon. Friday's market fluctuations highlight Wall Street's ongoing adaptation to a rapidly changing global trade landscape. Although the S&P 500 soared to a new high in February, bolstered by optimism about Trump's pro-business policies, stock values sharply dipped when the president imposed stringent tariffs. By April's low, the S&P 500 had fallen nearly 18% this year. A swift recovery began after Trump eased his tariff rates, paving the way for renewed trade negotiations. The Standard & Poor's 500 is a major stock market index tracking the performance of 500 of the largest publicly traded companies in the U.S. It serves as a benchmark for the health of the U.S. stock market and the broader economy. Tariffs between Canada and the U.S. directly impact S&P 500 companies' earnings, given that many have significant operations and sales in both nations. Warnings abound that these tariffs could disrupt supply chains and diminish revenue in the Canadian market.